Traders, the Forex cycle of doom is very real, and I promise you, you have fell victim to it. Now, we're going to use this guy on this video, the Phil Collins lookalike. And he is going to explain the Forex cycle of doom and why this is stopping and preventing most of you from having any success at trading, right? And it's something I did in my trading journey as well. Okay, so this is the video we're going to take a look at. He is actually sleeping today, so we apologize for that. He's got his eyes shut, sleeping on the job. But we are going to look at his while you'll never make money in Forex, the Forex cycle of doom. It's got over 3.6 million views and over 7,000 comments, guys. So lots of people have heard this advice, but what actually is it? Okay, so let's get stuck in. Let's take a look at the Forex cycle of doom.
You're never going to make any money trading the Forex market.
Well, I don't know about you. That's a very cheerful start. I've got a real spring in my step about trading now.
Trust me, I'm a 30 years experienced veteran trader.
Okay, so he's got 30 years of experience. You're never going to make money. See you next week, guys. Don't forget to subscribe. No, let's listen a bit further. Well, after his initial introduction, I feel a little bit more cheerful that he showed us his office and his old trading jacket that he used to wear on the floor and his nice old school Beamer, Zimmer. Who got the keys to my Beamer? The cycle of doom.
Hey there, now some of you may have already seen this video that we're uploading today, and that's because for some strange reason the original version had its ranking removed by YouTube. Now this could be a number of reasons, possibly because other channels have been stealing
it. Editor, get the lawyer.
Our content, who knows? Either way, considering the exposure we were getting and the relevance in the topic that I was discussing, we're going to re-upload it because I think it's a real shame we were helping so many traders learn a very valuable lesson. So for all you new and aspiring traders, thanks for tuning in and I hope you enjoy it.
Okay, the mood's a little bit more upbeat now, but he's about to tell you why we're all going to fail at trading.
One of the main reasons why most traders fail in the Forex market is because they end up getting trapped in what I call the cycle of doom. So what is the cycle of doom, I hear you cry?
It's not a new Avengers film, guys. This is to do with trading.
Well, the cycle of doom is basically this. Let's assume now you start off trading the Forex markets. You've got yourself a strategy. Now you might have developed the strategy yourself. You might have copied it from another successful trader, or indeed you might have bought it from somewhere on the web or so forth. So now you have your strategy and you're about to start trading this with live money. You start putting the trigger and off the bat you start making some money. Everything's going great. Then the inevitable happens. You start losing some money. The strategy starts taking money away from your trading account. Now this doesn't feel comfortable, so the most common thing you do when you start to lose money is you start to doubt the strategy. So you start to tweak the strategy. You make minor changes to the strategy and then you get back trading again, and of course you start to make some money again, and now you have the perfect strategy. But then again, the inevitable will happen. You will start to lose money. Every strategy will go through its losing periods. But you start to doubt your strategy. So again, you start to tweak, you make further minor changes to this strategy, and off you go again, and it starts to make money. Same thing happens. You start to lose money and you tweak again. And eventually, after tweaking so many times, you're going to have completely lost faith in that strategy. You're going to throw it out and you're going to go and search for another strategy. You're going to hop between that old strategy and a new strategy. Same thing will happen. You start to make money, then the inevitable will happen. You'll start to tweak it, and then round and round the circle, the cycle of doom you go.
I could not agree more with the cycle of doom, right? It's something I went through, guys, in my trading. So you start off, you have all this enthusiasm about becoming a trader, and you think you are smarter than the market, right? You think you can create the perfect strategy. So let's start there. There is no such bloody thing as the perfect strategy, right? Every strategy has losing periods, losing trades, right? Fact. Okay, to give you an idea, my win rate around is usually around 60% on average over the year. So that means I am wrong 40% of the time, right? And that is a massive number. Imagine you were a brain surgeon and you're going to have brain surgery, and they're like, oh, the doctor's got a 60% win rate. You'll be like, don't let him near my brain. But trading is very unique. It's not like any other jobs. You know, you have to accept that you're going to be wrong a large portion of the time. And there is no other job like that, really. You know, if you're a teacher and you're wrong 40% of the time, you know, you're not a good teacher. Whereas if you lose 40% of the time, you're a pretty good trader. You're looking for the perfect strategy. So what you do exactly as he says, guys, you put all these indicators or whatever it is onto your strategy. You have a losing period, you tweak it. Then you've got this new looking strategy. It's not the same strategy. And then you carry on, you have a losing period, you tweak it, right? And this just goes on. And what the original strategy was actually looks nothing like the strategy is now. So it's not the same strategy. And the problem with that is you have nothing to benchmark against. You don't know if this strategy works or not because it's totally different from when it first started. You need to stick with a strategy, do zero tweaking for at least 6 months. Then you have proper figures that you could use in terms of, you know, win rate, risk to reward, and how many trades you get. And then you have some numbers you can work with and sort of calculate if the strategy is doing well, right? But ultimately, you will have, you know, a percentage profit or loss. So you have to stick with a strategy for 6 months. So let's see what Phil Collins has to say about it.
Hopping and changing between strategies in the hope that you're going to find that holy grail. Well, get this, it doesn't exist. How do you make sure you don't get trapped in that cycle of doom? Well, first thing you need to do is you need to have confidence in the strategy that you're implementing in the market. Well, how do you gain confidence in your strategy? Well, you need to fully backtest the strategy. You need to put it through all the historical data so you know the characteristics of that strategy. You know how it's going to perform in winning periods and you know how it's going to perform in the losing periods.
So I agree with this to a point, right? But what makes a good strategy is that you understand it, right? There's a million strategies out there. I could give you 20 different strategies tomorrow. A couple of them are going to resonate with you and they're going to make sense to you. And they're the strategies that you want to trade. Because if they make sense to you, that in itself gives you the confidence to trade them. You're like, right, that makes sense. I think I can trade that. Whereas if, for example, you're trading a moving averages crossover strategy and you don't know what's going on, then you might not have confidence in it. And on that point, it makes sense to understand price action, right? If you can read charts in terms of trend, candlesticks, support and resistance, you know, those things are common sense and they're going to give you a good foundation on how to succeed at trading and read charts, right? So any strategy needs to be built on that, okay? He also spoke about back testing. Now, it depends what the strategy is. If the strategy is price action, it's difficult to back test. Whereas if the strategy is very mechanical, then it's easy to back test. I'm a big believer in forward testing. Obviously, don't do this with real money, right? Test it in a demo environment or very small amounts of money and forward test it to see if you can actually trade it. Because no amount of back testing is going to tell you if you can trade it. You need to physically do it, okay?
And it's only then when you know and expect to have losing periods that you're not going to lose faith in that strategy moving forward, and you're going to continue trading that strategy knowing that it's going to come back and give you the profits that you so desire and that you've seen in the back testing. And that's one of the main reasons why most traders fail in this business. The other main reason I think why a lot of traders fail in this business is because they come in with completely the wrong expectations. They've read.
Okay, so he's already given us the Forex Cycle of Doom, which was quite depressing, but very true. Okay, stop strategy hopping, stop tweaking everything, right? Number two is set realistic expectations, right? I got into this industry with unrealistic expectations, right? And many years later, you get some consistency. But yeah, so true. Let's listen to Phil Collins again. It looks like he's whistling.
All the marketing hype from the gurus and the educators, how you can trade from the beach, you can give up your day job, you can tell your boss to go and jump in the lake. You're now a Forex trader, and you don't need.
This was exactly me. I also thought I'd have a gold-plated Lamborghini by now, and I did actually tell my boss to do one. So yeah, I know exactly what he's talking about.
Need to do that day job anymore. Well, that's complete hogwash. It's not going to happen overnight. The other thing, misguided BS that's out there is that you can start off trading and make a ton of money with a $500 trading account. Again, that is not going to happen. Now, that's not to say you can't make a decent living with a small trading account, but it's going to take time and it's going to take work on your behalf. Why do you think it is the brokers offer you such bonuses to come and join them? If you put in $500, they'll match it with $500. They do that for one main reason, because they know you're going to blow that trading account. Now, let's assume a broker signs up 100 new clients a week, each with a $500 trading account, small trading account, yeah? Now, they know that you're going to lose that money. That $100, that 100 clients a week is a $2.5 million a year business for that broker, because they know that you're going to blow that money because you're coming in with the wrong expectations. You need to be realistic about what you can achieve in the Forex market.
So true, guys, right? And I would like to meet a trader that genuinely started with a $500 account and hasn't added any money, just started with $500 and now he's trading a 50K account or larger. I would say that is next to impossible, because $500 to grow into 50K would take so long for somebody to do. And before that, they would grow frustrated with the slow growth, right? Because it's such a small account, and would probably blow their account before that even happens. Yeah, I'm going to say there's no one that has done that.
A hedge fund manager would give his right arm, for example, to have a 25% return on investment. Imagine you start off with a $500 trading account and you have a great year. You've made 25% on your initial deposit with your brokerage. That's about $120, $125 or whatever it is.
Yeah, so think about those numbers, guys, right? On that $500 account, if you make 25% in a year, which is excellent going, you're probably beating most of the hedge funds. That is $125 for the year. So, and then your capital goes up to $625. It'll be such a slow process. You have to get some capital injection from somewhere, but obviously you need to be profitable before you do that and have some consistency, right? And obviously prop firms are a really good way to do this, okay? But let's carry on.
That's hardly enough to pay your internet bill. You've got to make sure that you're coming into this with the right expectations. As I said, in future videos, I'm going to show you how you can turn small accounts into a lucrative business. So do make sure you check out my videos on that.
He's just told us that it's in, he just said, I'm going to show you how to turn small accounts into basically larger accounts. Even if I grow an account from $500 to $550 in a year, I have grown the account, and by a very nice percentage, but it's not sustainable. You're not going to keep trading that amount, right? You need to get an injection of capital from somewhere. And again, prop firms, right, are a good way of doing this. So yeah.
Also, the other main reason why people lose money in this business is they over leverage. Okay, they're taking on unnecessary risk. And why are they taking unnecessary risk? Is because they have unrealistic goals.
So again, one of the biggest problems is, right, and this goes back to having a small account, right, and people getting frustrated. Okay, so he's saying over leverage is the biggest problem, which is basically saying they're risking too much, right? So you've got this $500 account, you've had a brilliant year, and you have made 25%. You've now got an account worth $625, right? You're basically saying to yourself, I am going to be here until I'm 94 building this account. So what I will do is increase risk, right? You will start taking on bigger risk, becoming over leveraged, and that will kill your small account as well. It will kill any size account, right? If you start over leveraging and breaking risk parameters. But of course, new traders with small accounts want to do that, right? Because $125 a year is not going to sustain you. So this is the point he's making, but I think that is a result of not having enough money in the account to actually trade.
Again, you've got to ask yourself a question. Why is it that the broker will offer you 100, 200, 500 to 1 leverage? Because they know the greed mentality of most people, you're going to lose that leverage and you're going to blow and wipe out your trading account. So make sure you don't get trapped in the...
So you'll notice that now, guys, right? Especially accounts in the UK and other parts of the world, you won't get more than 30 to 1, generally speaking. But then, you know, you can get offshore accounts, maybe they're in the Seychelles or the Cayman Islands. They will still give you 100 to 1 leverage, 200 to 1 leverage, right? Because they know on a small account, you're going to blow it. So yeah, don't fall into these pitfalls. And let's just finish with Phil Collins and his final word.
The cycle of doom. We'll explain about that in further videos as well. Make sure you have the realistic expectations about the Forex market and what it can deliver you. If you can start off and get your head around those two facts, then you're going to be halfway there to becoming a successful trader.
Amen, Phil Collins. He's right. I agree with the Forex cycle of doom and having realistic expectations, especially if you're trading a small account, guys. You're not going to turn $500 into 10K in a year. You're just not, right? You would be the world's best trader. Keep changing your strategy. Stop tweaking it, changing it, dropping a strategy, picking up a new strategy. That is killing you. It killed me. It kills all traders, right? So stick with a strategy, get the figures you need from 6 months of trading it in terms of, you know, risk to reward, your win rate, how many trades you have, etc. Then you know the parameters of your strategy and if it's profitable or not and where you can take it. And secondly, guys, have realistic expectations. Okay, you're not going to become a millionaire overnight. You're not going to get your gold-plated Lamborghini anytime soon. It's going to take, like anything in life, it's going to take a lot of hard work, discipline, and determination, I would say, with trading. So you're going to get so many knockbacks, and these knockbacks come in the form of losing money or even blowing accounts. And they happen, like I said, my win rate is around 60%. So this happens 40% of the time for me. So you have to get used to having losing trades, right? Get used to that quick as well as a new trader. All right, guys. So yeah, like he says, if you can, you know, overcome these obstacles at the very start, then you are halfway there to getting some consistency and getting some confidence in your strategy. And guys, as always, if you've enjoyed this video, please don't forget to subscribe to the channel, smash the notification button, and please smash that like button, and I'll see you next time.